Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. What is happening with Tesla right now? Why has it dropped 30% from its all-time high from around $900 to around $620 and then quickly recovered back to $700? Yes, the market realized the low 600s were too cheap for Tesla. And yes, I know a lot of you are hurting right now, especially if you're buying in the 800s or may have even sold some shares or hit some stop losses. And I feel you. I've experienced bigger drops than this before. This is part of investing. It's not always going to go up. Investing is long term. As Buffett says, our favorite holding period is forever. And if you don't feel comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. For those of you hurting right now, take it as a lesson. This is experience. And if you can handle it, then it will separate you from the bad investors and make you a stronger, more confident investor in the future. I don't mean to sound callous. I do empathize with you. But this really is a lesson for investing and should make you understand why you never invest more than you can afford, and that investing isn't about watching your stock go up in value the whole time. If you are new to Tesla, then this is nothing we haven't seen before. It's been a bumpy ride for some time. But those of us who have held through it all are still very happy with today's present value. And you'll be in time too, if you just hold through it all. So what has actually happened? It would appear the market sees inflation is on the way. If inflation is coming, then inevitably so are rising interest rates, hence the 10-year bond yields increasing. Investors now demand to get paid more the longer their money is tied up. If interest rates rise, it means there is no more free money, so the assets that produce no returns can now be beaten by the likes of bonds. This is not a market crash, but a shift from new technology investments like Tesla and Bitcoin into old legacy companies that produce actual returns and reasonable dividend yields. The actual market indexes like S&P and Dow Jones or even Nasdaq are unscathed. This is merely a wealth transfer. There's only so much money in circulation. When the thought of rising interest rates creep in, then investors want to move their money where they see it best allocated. They are not of the same mindset as you and me, who are investing in a future. Remember, Tesla is still in its infancy. We're aiming for 20 million cars a year. Tesla only delivered 500,000 last year. That's still 40 times more to come. That growth will take a lot of capital still, and profits will be sacrificed to achieve that, and dividends will not be something we will see anytime soon as a result. I mean, why would you want dividends when Tesla can invest the money for you in new factories that give over 100% returns? Where else are you going to get over 100% interest on your money? Let Tesla keep their profits and reinvest. This is what they are doing. They are an ROI machine. Not just their factories getting amazing returns, but their manufacturing processes too. The investments on the gigapress machines are a good example. Yes, they're expensive, but they reduce the cost of every car made. You've already told yourself so many times, Tesla is a long-term investment. Think 5 to 10 years ahead. Don't sweat the day-to-day stuff, or even the year-to-year. So what does this actually mean for Tesla as a company now? Tesla have enough cash in reserves and enough free cash flow coming in to grow the company to where they want it as quickly as they need. They're not reliant on borrowing large amounts of money for their EV growth, unlike the legacy automakers. Seriously, the $50 billion or so Volkswagen, Ford or GM have earmarked for their EV growth just isn't going to be possible if interest rates start rising. The economy changes. Growth and investments dwindle, as they need higher returns due to higher interest rates. Just look at what has happened to QuantumScape, down 15% today compared to Tesla's 2%. Why is that? Investors know there is no income coming from QuantumScape for some time. Tesla already have a lot of cash flow. They have products that are selling now, with huge growth too. In addition to that, if the incumbent automakers are no longer able to invest so much into EVs, then the largest market for batteries won't be there like they thought. Churchill Capital took nearly a 40% drop today, even though Lucid actually confirmed the deal. Supposed to be a Tesla competitor, but not looking so good now. Despite seeing a boom in the stock market, we haven't seen the boom in the actual economy yet, due to COVID lockdowns. Once these are out of the way and the vaccinations proliferate, then we should see an actual economic boom. Consumers will be spending money. The government still have enough ammo left in their monetary policy to try and get things moving. Jerome Powell, the chairman of the Federal Reserve, says he'll be keeping interest rates down and will continue to buy $120 billion in government-backed bonds each month in order to stimulate lending and spending. And what is likely the number one coveted consumer item these days? A Tesla. We hear people like Peter Schiff saying that Bitcoin is the cause of why Tesla has dropped so much. He has been using strawman arguments and trying to convince people to buy gold. Why? Because he sells gold and wants everyone to buy gold. So his opinion will be 100% biased. I can't tell you what Tesla will do in the next few days, months, or even next year, but the fundamentals haven't changed in any way. The company is still going strong, consumer demand should be as high as ever, and I think there'll be less competition now too. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.